Good morning and welcome to today's 10 at 10, which is of course available for everyone. Now, earlier on this week, we've looked at the various ledgers, and today we're going to be looking at meaningful postings. So sort of following on from the ledger concept, we're going to be looking at how you're physically posting the transactions. Now, one thing I will say is whenever actually making a posting, always be considerate of how you're posting the underlying transactions, because often this is one that causes a little bit of a dilemma or a little bit of confusion. And actually, this becomes much, much easier as a process when you consider the desired end result you're looking for, by which I mean, which report should a transaction be impacting? Should it be impacting the balance sheet or should it be impacting the profit and loss? If it's the P&L, should it impact our sales, our cost of sales, or our overheads? Fairly simple. And if it's the balance sheet, should it impact assets, liabilities, or equity? Now, it sounds a bit like the basics, but it's really important because it helps you isolate which codes to use from the off. Remember to utilize your chart of accounts whenever making a posting, add codes when you need, and edit the naming conventions so they add more value. Less is not more. And what I will say is, for example, if you have 5 different income streams, we probably expect 5 different account codes for sales. And likewise, you may have 5 different cost of sales corresponding to each one of those sales income streams, assuming, of course, that they incur unique costs. So, as well as obviously considering the meaningful posting behind it, we're going to actually mention some of the codes to watch out for. So this is what we've seen from experiences of what clients use and what errors we see. So first code to watch out for is general expenses or sundry expenses, as some of you may know it. Often this is a default, particularly if you use systems such as Receipt Bank, Auto Entry HubDoc, may just be the default account code for the system. So what I would say with this one is it should always be the last resort of your account codes in your P&L. It doesn't provide valuable information for our reports. So when reviewing it, it's really not that helpful and it's not value adding. So if you have items sitting in this account code, can you split the items out into more specified account codes? And what you may find is that actually you need to add a couple of account codes because there might be some of these smaller costs, but actually there may be lots of smaller costs that do add up. So please do check your general expenses. Remember, it should be a last resort. Stock is another really key one. If you do purchase stock, there's basically a couple of different ways you can treat stock. Now, the first one is your stock account code is an account code represented in your balance sheet. And of course, when you have a purchase invoice for stock, you're going to allocate it to stock, which sits in your balance sheet. Now, that is fine as long as you write the costs back to the profit and loss when you're making the sale. And what we can find in this situation is you can easily overstate the stock value held within your balance sheet by not writing back all of the costs into the P&L. Likewise, you get the opposite effect if actually your stock account code impacts your P&L. So all the while, you'll be accumulating costs in your P&L, but you're not actually accumulating a stock balance in your balance sheet unless you write back to your balance sheet. So point for consideration here, how are you accounting for stock and your cost of sales? Are you posting purchases to the balance sheet and writing back to the P&L or vice versa? Now remember, consistency is important. So when you pick one method, keep applying the same code consistently moving forward so that your physical purchases don't end up in 2 different account codes and you get a mismatch. Post them all to the same account code, choose a convention and stick with it. Another account code is the suspense account code. This is a control account and the balance of this particular account should always equal 0. But this is often used when a transaction is being queried or simply if you're unsure how else to post it. Problem with that is it sits there, doesn't get dealt with, and actually you could be missing cost and you could be missing repayments of liabilities, etc. It's complicated. But whenever we show a balance in this account, just remember we should always investigate it. This balance should always equal 0. So first question, should it even be there? Are we waiting an equal and opposite transaction which is going to offset it? Always review the suspense and remember your net result you're desiring is 0. So if there's anything in here, like I said, probably wrong or it needs an equal and opposite transaction to offset it. Now, really, really key one to look at as well is a director's loan account. This is, of course, a balance sheet account which determines how much your director is owned or, of course, how much, how much your director is owed by the company or how much they owe to the company. Always important to monitor this regularly, because if the director's loan account is represented as an asset in the balance sheet, then they either require a dividend to be declared to clear the balance, or they may be liable to repay it. Now, that one sounds much more painful, but what I will say, whenever you see this as the case, where actually your director's loan account is building up, always review the company's overall equity figure. Is it still positive, even though the director technically owes the company money until a dividend is declared? Is the equity still positive? If it is not positive for one reason or another, or it's lower than the shareholder's capital, then you have the potential situation for an overdrawn director's loan account, which will, of course, need to be addressed. So always review a director's loan account. DLAs being overdrawn, completely separate topic, but just something to be aware of. Now, got a little bit of a fun one for you. There's some codes which cause a little bit of confusion. First ones are trade debtors and trade creditors. Sounds simple enough, but actually this causes quite a lot of confusion. Which one's which? Which one means I owe someone money? Which one means they owe me money? Well, I'd say consider your bank cards with these. I have a debit card, and I know the funds physically sitting in that account are mine. I own them. They're my assets. Credit card, if I spend any money, I owe it to the bank. This represents funds I owe. It's a liability. Therefore, trade debtors, this is rather convenient actually, trade debtors are assets because debtors, and these are the people who owe us money. Trade creditors are our liabilities. These are people who we owe money to. So remember, debit, trade debtors, credit, trade creditors. Nice and simple, but always easy to get confused. Gross wages versus net wages. Now, this is a really, really common one. We see this across lots of clients. Very easy mistake to make. Just remember, gross wages are the cost in the P&L. Net wages are the liability due to the staff, and these will be represented in the balance sheet. Whenever you're running payroll, your accountant or bookkeeper should be entering in a payroll journal, which accounts for the cost and then sets aside a liability due to the staff members and HMRC. When you're physically paying your staff from your bank account, the underlying transaction should be allocated to net wages, the liability in your balance sheet, because you're paying down the liability owed to staff. So commonly we see that posted to gross wages, and it duplicates the cost. So remember, payments from the bank, pay down net wages. Okay, entertainment 0% and entertainment 100%. What on earth does that mean? These are more commonly known as client entertainment and staff entertainment. But you might ask why they're represented as 0% and 100%. Basically, it depends on whichever system you use. They might not necessarily be called this. It's just common terminology as a default. But 0%, entertainment 0%, is representative of client entertainment because 0% of the transaction is eligible for reclaiming input VAT or corporation tax. Entertainment 100% is your staff entertainment, and 100% of this is allowable to be eligible for input VAT or for corporation tax. So it's just the way the accounting convention works in relation to taxes. But you might find it easier simply to rename entertainment 0% to client entertainment and entertainment 100% to staff entertainment, because we understand it better. But personal choice, whatever you prefer. That's what I would personally do. It's just easier to understand. Good one here. Corporation tax and provision for corporation tax. Two very similar sounding account codes, two very different meanings. Corporation tax, just as is the cost in your profit and loss. Provision for corporation tax is the liability in the balance sheet. Now, what you'll find is when you have an accountant, they will post a journal for the corporation tax due at the end of the year. Now, this journal will account for the cost in your P&L, and it will account for the liability in your balance sheet. So when you physically pay the corporation tax from your bank account, remember the cost has already been accounted for. You are paying down a liability from, say, previous year end. So this needs to be posted to the provision for corporation tax. Just to emphasize, difference between corporation tax and provision for corporation tax is quite a subtle one. So when you're typing it in, say if you're using a system and you type in corporation tax, make sure you choose the right one. They both go to different places. We're paying down the liability in the balance sheet. Otherwise, you risk duplicating at cost. Really common one, see that quite a lot. So we've covered a few of the areas, a few of the grey areas, I would say, in posting and basically your ledgers in general, which just cause a little bit of confusion. One thing I will say is if at this point in time or any point in time you have any questions or queries, obviously please do let us know. Feel free to leave comments. Let us know what's bothering you, if there's something that you think, I'm still not quite sure on this one. And if you're a member of the BBB Club, please log in. We do have content for you. And of course, we have cheat sheets and things to help you through any of the content covered this week. If you're not a member, please feel free to join us. And alternatively, there is still the option to review our 10s at 10, our 10 at 10 every day, which is available for everyone. So please do come and join us. Thank you very much for listening, and I hope to catch you all next week. Take care. Bye.